going, traders? I'm Antoine Farrar, back with another trading video with Digital Goatz Academy. Welcome to our market forecast, where basically I give you guys my projections on what the market is going to do this week, what it may possibly do. Obviously, conditions may change as we get more data throughout the week, but we've actually been killing it. You know what I'm saying? We've actually been pretty on point. If we're not on point with the entry, we're at least on point with the direction. You know what I'm saying? So if you're tuning into this video, make sure you hit that like button, comment, and subscribe because we've been doing some powerful things here at Digital Goatz Academy. So let's get right into it. Hope everybody can see my screen. If you've been following my channel, you know that I primarily focus on indices. I think I say this almost every time. And I want everybody to understand that's our focus. Like we want to focus on where the majority of the money is moving. I'm not against regular Forex pairs such as like GBP, USD, which we are currently looking at, but as far as like the moves, there's two reasons why I personally like trading indices. One, that's where the money is at, right? Because they reflect what's going on in the stock market, not exact, but uh almost, you know what I'm saying? And the other is, I don't know why I lost my train of thought just now. There's the stock market and the volatility of it. I wouldn't even say the volatility, the momentum. I like to go about my day to make money elsewhere. I don't want to be stuck in a trade, sitting at my desk or looking down at my phone all day just because like I'm in a trade. And that's what tends to happen when you're trading regular Forex pairs. And again, that's to each his own because there are successful traders out there that trade just Forex pairs only. But for me, I just don't have the patience anymore. I used to be team Forex regular pairs, like all day. You couldn't convince me to trade indices because that's where I was making majority of my money. But now that I've kind of, grown to a different level, I need to see my money as fast as possible, or I need to lose my money as fast as possible. So I'm not, held hostage in the market all day. So what we're looking at is S&P. Now, S&P and the Nasdaq was the only ones that broke out of their previous highs. So if you remember, if you looked at what was it, weekly review? If you looked at the weekly review, I don't think we get here? Yeah, we already got here. So we finally broke out of the zone, and I don't think I pushed out anything for the past 2 weeks. So if you're tuning in on YouTube, you may not have seen this information, but I know I pushed out something talking about this range. You know what I'm saying? All the indices for the most part were ranging. So if you look at where S&P 500 currently closed, now that is an 8-hour time frame. That is a custom time frame because somebody asked me about this. What you do is you go to your time frame on TradingView. You have to be on TradingView. We're not looking at Trade Locker if that's what you're thinking that you're looking at. TradingView.com or the desktop application or on your phone. You go over here to where it gives you the intervals. It should say interval. How come it's not saying? Well, I guess it's just giving me the exact time. So this is your timestamp, pretty much the time frames that the market is broken down to all the way to seconds, but I don't have the I have the basic package for is this allow me? Yeah, that's what I thought. I have the basic package or the second or the pro package for TradingView. So if you want to look at the 1 second, you can upgrade, but to be honest, all you really need is either the basic or the pro. You don't really need to go down into the seconds, really, unless you're trading like binary options, which I don't think most Forex traders I know are not trading binary options. But anyway, right? So we look at the 8-hour time frame, the market broke out of this area. Now, I do know that I pushed out on a weekly review that I believe that this would consolidate. That's why I had this zone here because I said that S&P may consolidate before it pushes out. Now, I wouldn't say the cool thing, the thing that establishes, because I had to draw this information over here, this line right here that broke out of this previous high, this information, well, I had this line here, but I didn't have it extended all the way out. The reason why I ended up extending it all the way out because I did mention that there was a possibility that the market could go lower based off of this data point right here. Now, did it do that? No, which was good. What did it do? Establish some type of support because I do remember stating that we could have had the market possibly drop all the way back down here to this zone. I didn't want to see that because this was consolidation moving upward. So I would like to have seen it like close either at the top or exactly where it's at. So this created support. So instead of it making its way all the way back down to the zone, which I'm glad, it created support right here. Now, that's the thing that we've always talked about, that we've been talking about, guys, is that the market creates, indices create support. So where you try to identify it like a regular Forex pair, oh, it broke structure. In theory, it should. The beginning of the week, absolutely. By the time it starts trending Tuesday, I mean Wednesday, Thursday, Friday, you can't say that it's coming back to those zones. It could, but it'll probably do that either the following week or a whole day later, something like that. But guess what this did? This establishes support, which is exactly what we wanted to see, which we got to do better at establishing that, understanding that it's not always trying to trend. And it's been pretty consistent that the market does this during like Sunday to Tuesday. So now that we are on Tuesday, you know what I'm saying? Tuesday closing the day that we did close, this confirms that we are bullish. And the market did retest. What we need is it to break out of this high. Now, I know what normally everybody's probably thinking, well, don't we need it to break out of this high in order to confirm that we're buying up? Definitely. But come on now, we can spot that this is structure right here. How many times do we need price to touch a zone to verify if it's bullish or bearish? At least twice. And if you're confused, turn it to a line chart. I always emphasize that. If it seems like it's confusion because it's in a candlestick formation, turn it to a line chart because line chart gives you structure. It gives you exactly where the structure is at. And you can see it by where the market turned around, where it created these valleys and dips in the market. So now that we have support, and if you want to be, I guess, a smart ass, I wouldn't say a smart ass, but like if you wanted to base it off of the structure, I like basing it off of how low the market goes versus just the structure, because the market may not return back to the zone at the, you see what I'm saying? Or the market may return to the zone and and me having that structure instead of where the wick's at, and it positions itself for another buy zone all the way down here, for example. Why is this in the way? So it positions itself like say this were to happen. And we're keeping it as a candlestick, right? Where are we at? Hits up here and it says, oh, resistance. And what it wants to do, instead of like closing where the structure is at, which would be right here, it wants to touch the wick and create structure and then reject. I don't think a move like that is going to happen. I'm not even entertaining the idea that a move like that will happen. But until we leave this area, price could come down and test this level as much as it wants to before it decides to break up out of the zone. So just pay attention to that. But that's also why I'm capturing the wicks and not going at the body. If you ever wondered, like, why doesn't he just go to the body? Well, the wicks are information to me. Now, if it doesn't go down there, cool. But if it comes as low as possible to the wicks, then yeah, we'll take our opportunity if that's what the market is doing. Give me a second real quick. Oh, God bless me. Thank you. Man, oh, had to get that weakness up out of there. That's what we used to say in the army. So with S&P 500, we can see that we didn't even have to break it down that far to discern that this thing is buying up still. You know what I'm saying? So even when we look at the daily, if we just start scaling back out just to see how the formation is of the market, oh wow, this candle got tested and then it closed at the close of that candle. So this candle that currently closed for the day, it closed at the previous close for yesterday. So yesterday's daily candle, where it closed at, because this is where it closed at, this is where it opened at. The market today, even though it pulled back down, it closed exactly where yesterday's candle closed at, which is good signs, meaning that it didn't close below it, it closed equal to it. Really, if you're counting the wick, this closed above it, but because this is the data right here, like the body of it, we have to say that, all right, it closed equal to it. So the fact that it closed equal to it is giving us signs that it's not trying to push down. The only thing is that what is it going to do with this candle? Is it going to pull back on this candle? Because again, we're still consolidating over here. Is it going to pull back on this candle, or is it when it's open at when it opens up, is it going to gap up slightly and then continue pushing up? I'm hoping we get that move because after Jerome Powell's conference today, everything that we've pretty much forecasted has basically been happening. So his conference, or I don't know, interview with a testimony, whatever you want to call it, his speech today that he had at 8:30, he didn't have any he had more positivity, but he still had confusion in between, which made investors a little bit unsettled. But towards the end of his speech, he pretty much, let everybody, rest assured that pretty much the economy is stable and that they're still waiting on more data before they react to anything. You know what I'm saying? So based off of what everything that they're saying is that the economy is doing good, and whether we think so or not, all I care about is how does that information translate into the foreign exchange and stock market. So if you want to go on a grand venture like, oh, the economy's not good or whatnot, go off on your own tangent and do that on your own time. But we're using that information to make moves within the market. So that's all that we care. Is it positive? Is it negative? So we can react to the market appropriately, right? So let's go to US 30 now that we know that S&P is, well, one, because we broke it down to the hour time frame, like I said, that's a support structure. So the only thing else it could do is that this is what we have. This is why I always emphasize still reading the charts, even though we have the data. Like once we get more data, we need to know what the market is actually trying to do. So that did retest back into consolidation right there, right? So this was oh no. So this candle pulled back into this consolidation zone. Now, price could do, if it wanted to, if it's not respecting this as a pullback, it could test the top of this zone. That's what I'm really thinking, not into it. So you see, break out, they test back into it. Ooh, excuse me. But I like to identify the consolidation here. Now, when we back out to the daily time frame, look how that looks. So if this market were to pull back a percentage of this, and then we're like, why is this? Because how we close, we don't have a pullback for this candle. We got to see how it opens. Now, if it opens and slightly pulls down and then boost up, yeah, that's the momentum of the market. But look where we're at, where the consolidation pattern could possibly be. Are y'all seeing that? I just drew the fib in orientation of this candle. 100%. I mean, from high to low, high, low, 100% of that candle. And our consolidation pattern is the top of it is at least 50%. The bottom of it is 618. You couldn't get more perfect than that if we were to push down. You know what I'm saying? I'm hoping that we don't. I'm hoping that we just open on the side of this candle and then decide to push up for this new daily candle, but or don't even push down as low as this. But this is a new daily candle that's about to open up. So we have to see how the market responds, after we get more data. But this would be the area, if it did pull back, where I would be thinking that it would buy up from, because I think that it respected this as support. So the only thing I could see it doing is creating a previous high that the market wanted to shoot down to. You know what I'm saying? Oh, it's a W pattern. I'm just saying that's the possibility of what the market could do. But I don't see it to me, it would have to push up before it did that. But we'll just see how the market opens at 5 o'clock. So I'm not trying to, again, this is called forecast, not crystal ball predictions. You know what I'm saying? So based off of the data, we're doing the best we can to form an analysis and at least be prepared. So if it doesn't come back here, cool. If it does, then we're in preparation to say that, all right, let's see how it closes. This is possibly our buy zone. So let's move on to US30. Now, US30 is doing exactly what we wanted to see. Now, the only thing is that how reactive it's been where it decides to come back, and US30 did the same thing, try to come back and find support. So I kept my annotation up of the inverted head and shoulder. Now, the one thing that I did emphasize, and look at this, testing the high of this consolidation, but I didn't need for it to tell me that it's testing this consolidation. It's testing back into this gap, which that's what I cared for. Now, this is the thing that I identified that I told my community that I was like, I think this is the right shoulder. And this was the right shoulder. And this still is the right shoulder now that we have more data. This is what I was saying on my weekly call is that this whole side, all the way to the end of the left shoulder, we turn it green. I was saying that this is the left shoulder. All of that to the where the head and shoulder annotation or icon mark is. And then all this is the right shoulder. So I'm gonna show you. I'm gonna extend my pattern. I was just showing you by drawing a line. So I'm gonna extend my pattern all the way out. So then it will kind of make sense. And that's what I've always talked about, where it's like the way head and shoulder is, it does not present the image that you would normally like to see. But again, if it does what we need it to do, then we can treat it as such. Yeah, I would say. Or we can do this. I'm not trying to make the perfect one. But doesn't that look like a lot better? You know what I'm saying? And doesn't that look easier to read? Like it's gonna throw the manipulation, so it's not gonna be that pretty per even here, like the fact that this is still considered the head, you know what I'm saying? So we have support over here, or at least the test of a previous high, which I like. So hopefully we're not trying to create support on this side, but this looks like the retest to a previous high. If I just draw a zone back, look at where the structure is at, just draw a zone back. And there's a gap over here, so that makes perfect sense. And you can see that it closed at the high of this, but the lowest point it went to test was at that wick. A little bit shy of that, a little bit shy of the bottom of that wick. But look at this information we have right here. So if the market starts pushing up, we know that this is the right shoulder and we shouldn't even see this market come back down no more for a while. If this is the inverted head and shoulder, that's going to continue. Now we have to break up out of this zone. We have to break up out of that 45.22K, 45,000.2. But to me, this looks like an inverted head and shoulder that's trying to continue the market. If you look, we identified this inverted head and shoulder too. You see how this right shoulder was very long and it still brought the market up. So I'm thinking that we have the same thing, and what's been going on is that the inverted head and shoulder patterns have just been continuation patterns for us. But tell me how clean does that not look? You know what I'm saying? And then again, if we go to the 4 hour, because you know that's normally the timelines that time frames that we're looking at. Let's turn it to the Hakanashi. Let's see what it looks like on the 4 hour and the daily. That looks good. I want to see what it looks like on the daily. That doesn't look strong, but the fact that the last daily candle yesterday closed like this, it's building momentum. We can see it's building. It hasn't really formed its Hakanashi pattern, but this is basically the consolidation or the ranging area that I was saying that we need to have in order for the market to push up, because I know everybody was probably thinking, oh, we came this high, we're probably pushing back all the way down. Nah, indices, they do their own thing. I wouldn't say they do their own thing, but when you expect it to pull back, that's when it's ranging. When you expect it to range, that's when it's pulling back. You see what I'm saying? Or consolidate. So just pay attention to that. But based off of US30, I'm looking at us to continue buying up. I am looking at us this week to go to 45K. So if we continue this right shoulder, we'll be at 45K probably before the end of the week. Once we get there, I do think that we're going to break out violently. I'm thinking that before the year is over, because of how close we are, we could see US30 at $50,000. And then from there, it'll probably start doing those slow major pull, but maybe. I don't even want to put that into your mind that US30 is going to operate like that. We don't know what the high is going to be, but I am looking at US30 to go to 50K, and I'm looking at S&P to go to 7,000 this year. And we have been on our way to doing that. We have been hitting those numbers for us to actually, see that this year. So cross your fingers. And obviously for us as stock investors, that's obviously going to add a lot of equity to the stock shares that we're invested in. So yep, that's it for indices. As you can see, like I said, just to mention the NASDAQ, it made a new high. This is why I don't like trading the NASDAQ. You see how it pulled all the way back down here? That's why I don't like trading it, because that's a big move and stuff. And US30 and S&P did not do that. That's why I kind of stay away from the NASDAQ, because some days it seems like it has a mind of its own. But it looks like the only thing it did was test pretty much this high right here, or really this area that it broke out of, this consolidation. So back at pretty much the high of it. You can see that this was the consolidation pattern, but you can see that this is the high. So that makes sense. Not to mention it's really testing back into this block. So yeah, all that makes sense, but still though, that was a major move. I mean, US30 does that, but it seems like the NASDAQ moves more pips to cover, it moves more pips to cover like the movement that NASDAQ makes. Man, we could have still been in. Well, I wouldn't have wanted to be in that. All the main mistakes right there. But yeah, we're still bullish. Excuse me. You can see that if we back out, we should see that what? NASDAQ is at a new high. Let's back out even more to make sure it's at a new high ever. Look at this. We're at a new high ever. After coming all the way back, this was this year. This move was this year. This thing is pushing up. The next thing, like, it's not coming back down until we get some major negative news that's going to bring indices operate like this. I remember I was trying to sell indices one time and it just kept beating me up. It just kept rising up. Like, yeah, it'll treat it like it's a sell sometimes. And it was around this time. I was looking for this. This finally happened in 2021 to 2022 when I was expecting it to happen in like 2020, which based off of like COVID, it finally did its little pullback, which again, it broke out of a zone first. So you see it broke out of a high and it broke out of it strong. So we're about to break out of this high. That doesn't mean that we'll return here. We don't know if we'll ever return here. We'll have to see what area, like, for example, you can see that it hit the 618 on the dot. So let's say because this is where the consolidation is at. Oh, that was the move right there anyway. That was the move that brought this down. So now we're in our next wave. So let's treat this as 0 or as 100%. And then wherever we land at, we'll know that that's our high, possibly from here. So what that's showing you is that the NASDAQ could possibly reach almost $30,000. We might see that. Wow, that's pretty unique. Let me do that with US30. Look at me finding some new shit to do for y'all. I never did this before, but that actually raises like a good point. But I don't even know how high it would go. Yeah, it's not working too well with US30. But yeah, so as you can see, the only thing that didn't break out of a high yet was US30, which I mean, it's hard to say that it won't do that in comparison to the Nasdaq and the S&P 500. So I'm looking at US30 continue, and then once we get a breakout, we'll try to figure out whether that's in 2 years or 3 years from now if we're going to get a pushback. Not to the downside, but in order to correct itself. So I'm still strong on Bitcoin going up. Like I said, I do think the next level is going to be 120. Man, did it hit? It didn't do that today. No, it didn't. Man, I was on the 14th. It hit 123K. I did not know that. So the next zone that I did mention that we would probably see Bitcoin hit was 125K. So it looks like it's gonna happen. So that's my expectations for cryptocurrency. Just looking at oil real quick. Oil is starting to sell off, like we mentioned. Now GU is the only thing that's been like kind of doing the opposite of what we projected. The oil is still selling off. The fact that it created this gap, I think is going to ignore that. And I think this is heavy traffic that's going to bring the market down. And then that's just going to be the excuse for the market to grab that whenever it finds whatever it's looking for, whether it's support, some form of structure. But to me, I still think that we're bearish on oil. So I would say these areas are still good areas to sell. Just be careful for the pullback. And GU, um, based off of, well, this was our original area, and I think I mentioned this. I think I mentioned this a while ago if I did this on one of my videos. So for the daily time frame, let me turn it back to candlestick. Last week, the market opened up bearish. So this was last Sunday. This is where it opened. You can see that it's higher than last Sunday, but it's also low where our previous sell zone was going to be. This area was going to be our sell zone. Let me turn that red actually. Because that was a previous low that the market that the market broke out of. So what we were looking for is the market to return here. It didn't do that last week, which was good, but you basically trapped sellers in order to push it up, and then probably trap buyers somewhere up here because these were previous lows. Trap buyers somewhere up here and then sell the market off, which it should break this level. It should want to break these levels. But as you can see where my zone is marked at, it's at 382 right there. So the 38.2%. And if it respects that for the selling side, we know that that's high traffic momentum right there. That means just to shoot this thing down exactly to our target. No questions asked, probably even a little bit lower, but we'll have to analyze the market once it opens up. But that's all I got for today, traders. Like I said, man, just stick and move. Even though we have the direction, get in and out. Don't let these markets fool you because it'll make it look real enticing just to murder you on the opposite side. But I'll catch everybody on our next video with Digital Goatz Academy. I'm Antoine Farrar signing out. Peace. I hope everybody has a successful trading week. Let's get it.